Hey everybody, welcome back. It's June 23rd, 2026, and a special one. I'm traveling, so sorry about my audio, but at least I'm actually on webcam. And so today was largely a down day in the markets, and it was felt like an even bigger down day if you were in tech or semis. But under the surface, it was actually a rotation day, and we'll get into what some of that was. And financials, healthcare, utilities, staples, real estate, all of that were holding up a lot better than the tech trade. So quick disclaimer, this is not financial advice. This is for educational purposes only. This is how I'm trading the markets, how I'm thinking about risk, how I'm managing my own book. And thank you so much to everybody who subscribed. And if you haven't subscribed yet, please do. It really makes making these videos worth it for me. So I really appreciate that. And leave a comment. I get back to everybody. So today there were really three things driving the tape. First, we had continued sell-off in tech, semis, and the AI linked names. And a lot of the market is still wrestling with the same question. Are these AI infrastructure investments going to produce enough return on capital, or is the market starting to punish companies for spending too much too aggressively? And we've seen that actually more so in the hyperscalers, but now we're seeing it in some of the other parts of the AI trade. And then secondly, we had stronger than expected PMI data, and the flash US Composite PMI came in at 52.2, and manufacturing was strong at 55.7, and services improved to 51.3. So that's not a recessionary kind of data set, but it keeps alive the idea that the Fed might not be able to get too dovish too quickly. And third, there's still geopolitical and inflation backdrop in the mix. Oil has come off some of the worst case fears, but the market is still watching the Middle East, supply chains, inflation pressure, and all of that stuff. And the bond market is being watched very closely. So a little bit of jitteriness there. So let's jump into the individual indices. And like I said, I'm filming this live while the market's going. I'm traveling for work, so I have to go take a few meetings. But wanted to close out strong on the day here for you guys. So SPY, it's as of now, it's down 1.26%, and QQQ is down a whole lot more at 3.07% right now. IWM was also down. It's getting close to a percentage now, but for a riskier sector, I was expecting it to be down more, given the QQQs were down so much, and we'll look at the constituent parts that were driving this down. Whereas the Dow actually held flat to slightly up. Let's see how it closes at the end of the day. And TLT, same kind of thing, flat to slightly up. I actually like some of the price action here, and we're going to go into TLT a little bit later. But a lot of the reasons for these moves today is that it's not a classic sell everything and everything sell off, if you will. It's more of a valuation positioning and leadership reset, and tech and AR are being repriced while money is rotating into areas that look more defensive, more stable, or less exposed in general to that AI Capex debate. So now let's jump into the individual sectors real quick. All right, so we could just look at the heat map real quick. Sometimes I go through individual sectors, or we could actually go through, the one-day performance here and just have a look. Obviously, this is still going to be updating, but consumer was up, real estate was up, healthcare was up, utilities were up, energy was up, financials was basically flat, and so were communication services, although they were slightly down. And then it starts to get a little bit bloodier in the streets with consumer cyclical, industrials, basic materials, and technology, as we all knew it would be. And so, the reason for these moves today is pretty clear. Technology is the problem child. Staple, healthcare, utilities, real estate were acting much better. So the market's not saying risk off everywhere. It's saying we're going to be much more selective about where we want to pay high multiples. And that being said, from a sector standpoint, we just have to talk about the elephant in the room. It's semis. So SMH was down 0.7%. It's about to be 7% right now. Everybody's looking at Soxel just because those become so elevated. And that fell 23% today. Of course, it's a multiple of the SOX. And also looking at SOXS, because we've been inversing this for a while. And we've been talking about in some of the videos about leveraged ETFs. So you can see a link to that video. We released one over the weekend about how to trade leveraged ETFs, some misconceptions, all of that good stuff. So you can check that out because it's quite relevant right now, what's going on in SOXL. And I know a lot of people watching the channel were thinking about trading SOX S. So yeah, the market is saying that there's a little bit too much risk right here. And it should be no surprise to anybody who's been watching semis that this run was just epic and was poised for a pullback at some point. The question is whether this is the start of something or if it's just that massive pullback to get some of, the euphoria out of the market in that sector. And so speaking about the rotation there and being selective, it's important because when you get a day like this, it's easy to look at the Nasdaq and think the whole market is falling apart. But under the surface, there is real rotation happening. And that's really important because yesterday we were talking about on SPY, if we were to come down and actually fill the gap there, we'd be looking for it to hold or reclaim 740. And at that point, maybe some of the other names that have been laggards would start to perform a little bit better. So there were a lot of big stock stories today, but the ones to focus on were software, semiconductors, Salesforce, Microsoft, TLT, and I also want to talk about American Airlines. And the biggest story is still a pressure on AI and software. Investors are questioning whether AI is a margin expansion story, a productivity story, or a giant capex cycle that could pressure free cash flow for longer than expected. And so that's why names like Microsoft and Salesforce are so important here, because they're not speculative companies with no revenue. And I've done videos on both of them. These are cash flowing machines, but the market is still trying to figure out whether AI is a tailwind, a disruption, or both. And so CRM is holding up really well today. Microsoft is currently trading up 1.5%. And that's really important because Microsoft can start acting better while the broader tech ETF is still weak. That could become a major tell of what's going on in the market here. And then I also want to talk about American Airlines and TLT. So let's actually go into the trades that we've been watching. So let's start with CRM here. And so the first thing I want to talk about is that bottoming pattern we called out yesterday. Obviously, we weren't trying to call the bottom. We were just looking at perspective, reversal points or basing points. And the point of that was that we hadn't seen many yet. And I do want to mention one thing here. That hourly pattern that we saw this morning, star reversal pattern, which played out with an engulfing, which is a really great, wonderful representation of that, how that pattern should look, and a very strong version of it, meaning that the bullish closing candle here completely engulfed the bearish candle that starts the pattern, and the indecision candle had a wick to the upside that we also engulfed. So I really loved this, and I thought that was a strong signal. But what I want to mention is that if you don't have your hourly aggregation set to the opening of the standard market hours, you may get different types of candles. And I just want to mention that quickly because it is kind of an important thing when you're trying to trade like an institution or look at how institutions are trading, even though, prop shops might have some proprietary ways to look at different time frames. But looking at the 1 hour and the 4 hour, it's very important to make sure you understand where you're aggregating from. So if you have this show extended trading hours off, essentially, you'll aggregate at the start of the market open, meaning that the 1 hour candle that you first see is from 6:30 to 7:30, or if you're on the East Coast, from 9:30 to 10:30, as opposed to it showing from 9 to 10, or in my case on the West Coast from 6 to 7. So that's very important, or this pattern won't show up, because if I turn extended hours back on there, you'll see that that pattern no longer exists. So you may be like wondering where it was. So that's a really important point there. And I'm going to go ahead and continue to turn off that while we talk about this trade. The other thing was the RSI divergence that we saw on the daily here. And we talked about this in our video on CRM. So I'll link to that somewhere. Where the RSI was oversold back here, we marked it out, and then we price made lower lows over here, whereas the ISR started to make higher lows. So the trend is reversing on the RSI potentially, or we're just making lower lows with less strength, and that's a sign to us, especially after this capitulatory volume candle that we have right here, this huge volume for CRM, and that was the day before the basing pattern. And we did mention on that day a lot of accumulation was happening in Microsoft. We were looking at some whales trades. So you could see that video too somewhere. I may link to it. But yeah, so CRM is a really great play. We're in it for, again, not financial advice. This is how I'm trading it. And when I say we, I mean Alpha Harmonics, just my company trading it with our own capital. And CRM, we're in it with some long dated calls, not exactly leaps. We got an 87 DTE and a 115. So those are, speculative or quantitatively devised plays. They're not long-term investments. But today, we also entered CRMG, which is the 2 times leveraged long CRM daily ETF. And we did a video over the weekend about how to trade leverage ETFs, and we dispelled some misconceptions about them that I've seen other YouTubers. Also talked about the math that is underlying how these work, as well as the difference between volatility drag and rebalancing mandates, and then also covered a few different trade strategies. So check that video out. It's definitely going to be listed somewhere here. I'd really appreciate that. So the next trade that we've been watching, and let me go to an account that's actually holding it right here, is TLT. So this may be an odd one for a lot of people, because I think that in recent years, traders have kind of, at least in the retail space have not really wanted to participate in trading TLT, and there's no question as to why. It's really been chopping around for a very long time, and if we even look at it on the monthly, you can see, except when COVID happened, it's not been a really great time for retail traders, and that's actually when a lot of retail got into the game there. So I could see it not having been a real great thing for people to talk about on YouTube videos or for retail traders to actually look at. But I know a lot of you out there are probably watching this channel because you like quantitative investing and you also have long-term holdings and you're thinking about the market a little more holistically. At least I hope that's the kind of people that may be watching it, even though I talk about some day trades and swing trades as well. But I do hold TLT a lot, and I hold it for various reasons. Sometimes it's to do a multi-tiered strategy where I'm using the 20-year treasury note as the secondary part of a portfolio against something like a leveraged UPRO, or maybe I just want to hold the yield. But at the current time, I'm actually been accumulating it over the last 2 years, essentially, in a number of different accounts as a ballast holding, meaning that the oscillations I'm observing and the expected moves that I'm seeing in the options market say to me that I don't think we're going to move farther than will be offset by collecting the dividend yield, the interest that I'm going to get for holding this. So it's a play that I've really liked for a long time, and I do expect some upside at some point. But what I also wanted to point out was that even when the Fed was coming out very hawkish, TLT was still treating it quite well. A lot of traders would have expected it to fall during that, but we didn't. And I don't want to get into the macroeconomics and monetary theory and all that goes into that to understand how yields are going to play out and how bonds are going to play out at different points on the curve. But what I do, I just wanted to point out that it's holding up well. And I do think regardless of what happens, specifically whether they cut or whether they don't cut or if they actually raise, I still think TLT is going to do well. And let me know if you want to see a video on that. But I'm just throwing that out there because on the technicals, I'm seeing something a lot better. And sometimes those start to indicate to you maybe you should be reading into different parts of the financial complex to understand how this might be working. But what I see here is on the weekly, so this is a very large amount of time here. This is since 2024, essentially. We've had this descending trend line right here that we've tested previously, got rejected, and that was obviously the first part of that trend line. We came back out, we were able to push through it. We came down again, we were able to touch it, and now we're hovering right around there. And this has been a point of a lot of accumulation over time. So I do like this. It could act as resistance at this point because it was a support during 2024 that we came off of when they did one rate cut. So I do like this perspective level. But what I really like about this is that from an asymmetric upside, the risk reward, or if you actually want to be specific, reward to risk, I actually think it is very asymmetric to the upside, especially if we break through this trend line. So at something like this, I might start buying TLT options or even TMF because I want to cap my downside / I want to get out of this if it doesn't play out, and I'll know relatively soon. And these are the kind of plays that I look for where I'm going to take a number of paper cuts, if you will. Essentially, I'm going to cut the trade if it doesn't break through, but then I'm going to re-enter it again if it starts to look like it will. Those are the kind of trades I like for this, especially for something that I'll be holding. And a lot of times I'll also be adding to my long-term portfolio right here anyway. I haven't drawn in some new fibs here, so I can't really comment on that part of the trade yet, but I did want to point this out. We have a lot of trades to get through, so I just wanted to bring this to everybody's attention because I do trade TLT, and I also trade TMF, and that's doing quite nicely here. And again, I just want to plug the leveraged ETF video because maybe that will be helpful for understanding how I might be trading TMF here, just to account for all the various different factors that are involved with leveraged ETFs. The next thing to look at is Microsoft, and I don't have a ton prepared for you here, except that we are starting to see some reversal play out. And what I really like is the reverse on my super trend. We've talked about this before a number of times, but what else I really like here, and if you don't have the super trend, in Thinkorswim, these pivot points, you can use the default pivot points, and you'll have the same setup that I have here. And let me know if you guys want me to do an indicator episode here. But what I really liked today was that we're holding above the pivot point. So that's really great. Even though we're below the point of control, this is one of the first times that we're actually holding above the pivot point for the day. And that's also coinciding with the 15-minute starting to turn positive on the super trend. And we are, there was a lot of volume down here at the end of market yesterday. And again, I have extended hours off. And so you can see that huge dump towards the end of the day seemed to be a bear trap to me. A lot of volume there. And we've since recovered. And one of the things about Microsoft, and we were talking about cash cows in general, is that people were dumping out of the semis today, but they didn't dump out of Microsoft. They started to go into Microsoft. So I see that as compelling for holding up the market, but even more than it holding up the market than it otherwise would fall, because we are still seeing SPY down quite a bit. More than that is that my thesis was we needed to see capital come back into it, but we needed to see that happen because SPY was coming down, or else I didn't think it would be sustainable, because I really wanted to see rotation coming back into that. To me, that says institutions are saying the valuations here look better than the valuations in other stocks at the moment. So that's all I really wanted to cover with Microsoft. You can watch some of my other videos. I have a lot of videos about Microsoft and what it needs to recover. But there's a lot of really great things here. And I'm also looking for it to reclaim that 382 line. And if we do come back up to 380, where we saw a lot of that whale activity over here, this is going to look like a really nice inverse head and shoulders. And I wonder if we saw any of those bottoming morning stars like I saw on CRM. I don't see them, although back here we started to have a really nice engulfing, but then maybe this was the bear trap. This remains to be seen. I don't think Microsoft is just going to skyrocket, but I do think that this is a great place for me to continue to pick up shares. Again, not financial advice. Please, everybody, don't take trades based on what you see on YouTube. You don't know when people are getting in, when they're getting out, how big their book is, what their risk is, where their targets for rebalancing are, all of that stuff. This is just how I'm looking at Microsoft right now. And I do like this trend. One other thing that's interesting is where it looks like we may have an inside bar day right here, which is really great to trade. I'm not going to talk about how to trade specific candlestick patterns, but to me, that does read like a little bit of an indecision. But it has been bullish indecision as we gapped up. And also, it looks like we have, I don't see it specifically here, but I must have been charting out some divergences. My assumption is it's on the 1 hour. Yeah. So we started to see bullish divergences on the RSI here, and we saw multiple of them. These were a little bit more hidden because I didn't see them on, maybe I saw them on the 4 hour. No, on the 4 hour, did not exist. It was actually lower lows on the RSI while lower price. So that's something just to look for. Those kinds of divergences are really great. They're not quite as strong. But again, Microsoft didn't have quite the recovery that CRM did. But CRM might be pulling back a little bit at some point, although still upgrade on the day. Microsoft up 1.56 at the point of filming this, but we still haven't recovered past yesterday. However, I do want to say that on the GEX, let me see if I pull this over. I'm not sure if you guys will be able to see it. But at some point, we turned into positive GEX and the 380 strike was building up. I need to update this because we've since started to consolidate right around I guess where the flip line was, and we may have even gone under it at some point. This takes a moment to update because I'm trading from a hotel, and everybody knows how hotel Wi-Fi is. Okay, so it reloaded there all of the data that it needed for this, and the 380 is still growing. And so this is the what expiration? 624. So that's tomorrow's expiration. There's a lot going at 380. So that is my upside in the near term there. But I've also seen a whole lot more positive GEX start to form at the 500 here. So I like that, even though I see 440 as the beginning of this dealer cluster. So I think once we get to 440, we're going to start to see a little bit of resistance. And that's where I would start to be closing a lot of my levered shares. Great. So that's all I had from Microsoft for you. So the next one I want to talk about is American Airlines. This is been on a bit of a run. And so the question would be, why would you get in here? And it's because of something that it's done on a higher time frame. So this is going to be a weird one in the sense that I'm going to be a very high time frame for everybody, but I'm looking on the monthly here. And when I see this on the monthly, there is an institutional base here, 100%. I mean, you can't know anything for sure, but I mean, if you ever want to talk about what would be written in a textbook about an institutional base cost basis, it's right here at the $10 mark. And you can see that we've started to come down month after month, year after year, coming down into here, and we keep hitting it. But what's actually changed on the monthly right here is we're about to have a huge crossover. And now it might not happen. We could get faked out or whatever, but it's starting to happen here. And we broke it across a trend line as well. And so these are regression channels that I have here, standard deviations. And one of them was acting like a trend line that we haven't crossed in a very long time. And in fact, when I go to the weekly, you'll see some more trend lines. But if we look at this, the 20 is about to cross over the 50. And so I'm loving that from a monthly stand up, because when monthlies break, they break hard. It means that institutions have been accumulating this since 2020, and now we're starting to see some type of crossover here. So this could take a long time to play out. So the way that I've been playing it, and again, not financial advice, these are just my trades. I bought a 451 DTE 50 delta. There's zero theta going on here, and there's a lot of open interest comparatively. So I really liked this strike. It fit my risk profile well and my trading horizon here. I bought two of them. I may add if we pull back down. That way I can scale out. I always need more than one personally for these kinds of trades, but I also think this is going to play out over a long period of time. And on the daily, it looks like the move has already happened, but I was looking at it on the monthly, and I needed to see this happen on the daily to have conviction on the monthly. And if we look at it on the weekly, it's also starting to look good, because I feel like a lot of people were looking at this on the weekly. There was a trend line here that we broke above. In fact, we gapped above it. And I love when you gap above a trend line like that, especially if you hold it. However, that being said, I wouldn't be surprised if it came back down in to test it somewhere, maybe around $14. So that has not been my full position. So that was just a quick rundown of a trade I've been watching. Please leave some tickers below if there's stuff you're watching. I'll always do them if I have time to do it, because I find these to be a really great value add to the channel. Now let's do a quick forecast here. And again, it's more like a weather report. I don't tend to claim I know what will happen. But yesterday, what I did say, and I'd like to hark back to this, because again, I like to look for asymmetric upside generally, or asymmetric downside if I'm playing an inverse. But I said that yesterday, this is yesterday's candle right there, that we are falling below the 20 SMA on the daily. And for me, that's not bullish enough. I want to see something else that tells me I should get engaged here. And it wasn't surprising that we had a gap down. And we also talked about filling this gap. I don't like that we gap below it. I would have liked to see us hit it during more normal market hours to really feel like we wiped out the proper liquidity, or hit it in a series fashion. So I don't love this, but you can see what happened during the course of the day. It popped back up, and then that liquidity was swept and we came back down. So it's not the worst thing for me to say that I'm starting to see some repair to the chart here, but you can see the volatility is definitely back here. Not only all of this gapping, and not only the fact that we've fallen below moving averages multiple times, but the fact that we're moving 1.3% every day or more on the SPY is abnormal. And it's abnormal over longer periods of time. And it means that volatility is here, just in the sense that over the course of the day, there are larger moves. And if you look at the QQQ, of course, that's exaggerated. But my point there can be seen very clearly without going back and back testing and looking at the data. But look at the size of these candlesticks. Now look at the size of the candlesticks we're starting to have here. Point is, this is not constructive for me, but I also think that we're going to be chopping around for a while. I don't think this is the end of a moment here. In fact, this is a previous breakout of a recovery. So it's not the weirdest thing to come down and retest, but am I swinging for the skies, the fences again right here? No, I don't think that I will be. So I don't know that I need to go much further into the forecast there. I would say this is not excellent longs for me. Stuff like this, where I come down into the 50 SMA on the daily, to me doesn't say I want to play it for a bounce. It says to me I want to play it for picking up a few things that may already be undervalued, or more likely I want to sell some cash secured puts on things that I would not be unhappy to be assigned. So that's the kind of strategy I'm looking for here, plus also looking at things that have a long-term thesis there, like American Airlines, TLT, we were talking about, CRM and Microsoft, same thing. Those are longer-term plays for me. Well, thanks so much, everybody, for watching. I hope you like this new format. I'm not sure I'm always going to show my face. Please like, comment, subscribe. It really means the world to me. I left a few videos this weekend too that you might want to check out. But if you haven't subscribed, please do. It makes making these videos worth it. And stay safe out there, and happy investing.